We're here in SuperReturn Emerging Market 2015 in Amsterdam. And Pierre, good to see you here. We'd like to speak a little bit about minority rights and how you go about them in Pine Bridge. First of all, why do you go after minority positions? What's the rationale?
Well, in general terms, the history of obviously private equity include a lot of control position and leverage buyout. But in emerging market, teaming up with entrepreneurs is a very good opportunity, and that's what minority investing allows.
I see. And has it been a successful approach, and what are really the red flags as you look at these minority positions? What do you really look at, and what really triggers a no from you, as you invest?
Well, in general terms, you have to make sure that your interests are well aligned ahead of making an investment as a minority shareholder. And therefore, you have to spend a lot of time in due diligence, not only to look at as you call the red flags, but the main red flag is whether you understand the same thing with your partner, whether you have the same view of the development of the company, whether they have the same view how you will grow the company, take debt, sell the company.
And how do you actually ensure that over time your understanding remains aligned with that of the majority entrepreneur?
Well, there is no one single recipe. The answer is you have to stay very close. It's like your family. You have if you have distant links, people move each of them in their direction. It's what I would call the holistic approach of investment, where you actually stay at every moment the main confidant, the main source of help, the main source of wisdom to your partner.
Great. And if we look at your journey so far, how did you plan your exits? What are the most likely exit from that position?
Well, you have to discuss a lot with entrepreneurs and with families to know whether they understand that whether they want to sell the business and they will accept the business. And they don't say if typically exit for minority are trade sale or listing. So you have to have at least more than one or two exit routes. So you cannot have a misunderstanding where the body of your partner said, yes, I will accept to sell my company, but his brains or his heart say never, because that's my name and my family and I want to be there. So you have to push people to the limit to understand really what they want, because you cannot afford to have a misunderstanding of those basic issues.
And out of curiosity, were you able in certain instances to actually sell your minority position without a drag along, without an IPO? Is it a likely option?
Selling minority, unless you sell it, which happened in some cases, to the original partner, which will raise, for example, debt to buy you back under pre-agreed terms. That's something that they can do. In some cases you can structure it with a put and call. In some cases you can just have a discussion. That happens. Selling to replacement capital may happen, but then you have to do a real new deal. Nobody is just going to buy just to replace you. You have probably to have new agreements and also a large deal for people to understand what will be the next stage. But yes, it is possible and dragging along anyway against the will of your partners is something that we all know cannot work.
Unwise. And if you compare the returns of this strategy versus the more traditional strategy in developing markets of buyouts, how do the two returns compare?
Well, I think it's a return about leverage. So, leverage bring accelerated return when the times are good, then the price of debt is low and the company is performing, and high volatility in worst time when the performance doesn't follow. If you are in growth equity, which is primarily the case for minority investment and some controlled investment, is just identifying the high growth potential companies which will grow much faster than their market, would consolidate the market, and will possibly expand in other markets and bring the accelerated return by this internal growth of the company.
Well, great. Great to have you here.
Thank you very much.